Yo, what's good, guys? All right, then. So we're back again on another edition to the Breaking Down the Pairs. So tonight's episode is episode 7. Now, we're going to be looking at something a little bit different because what we've been doing is we've been looking at how pairs, particular pairs, how they move. All right, and I've been talking about level 1s, 2s, and 3s, peak formations. So this video is about understanding the cycles. All right, so the cycles, they are the hardest thing to work out when it comes to trading, and specifically with this strategy that we're using and talking about. So we're going to pull up a few pairs and we're going to look at certain cycles from start to finish and how to try and spot them. All right, you'll never be able to spot them straight away. All right, it takes time, but that's all down to how often you commit to looking at charts. All right, so let's get to it. All right, what's good, guys? Okay, so let's get straight to it. So the first thing I'm going to be talking about is Kiwi yen. All right, now, if you remember in episode 5, we spoke about the behavior of what was going to happen with Kiwi yen. Okay, so we pulled up this chart. I'll show you now, just so you guys can remember. That's euro. Okay, then cool. So here was the chart. So in that episode, we were talking about understanding, Kiwi yen's future behavior, all right, and how we understood why it formed this high here and how it came down. We understood the levels and where it was going to go next, okay? Now, at the point of that video, I did say to you guys that we'd be expecting the fact that we got this bottom here, all right, the double bottom, the W. This would be the new peak formation. The reason being is because from the three peak formation high, okay, it's now been 3 days since it's pulled away, all right? And it's achieved way more, it's ADR times 3, all right? Now, we see the levels here. So we've got level 1, just in this line here, level 2, and then level 3, which is more choppy behavior, okay? So this was level 1 from this line here, level 2. Now it would need to break this bottom here, which it did do, and it formed level 3. Now, there were so many factors that were coming into play for us to understand why price was going to return to the upside. Firstly, being the obvious one, was that the ADR had been achieved. That's one confluence. The EMAs are all fanned out. That's 2. The pattern, which is 3, okay? And the fact that this happened at the midweek reversal, all right? So we were expecting it to change direction during the week. It's exactly what it did. So let's look. There's your W formation. It's exactly the same thing there, all right? So I said on this video that the peak formation here would change to about 1 or 2 in this area here. All right. Now that was based off this dashboard here. Excuse me. This dashboard here. So what are we looking for? How did we know this was going to happen? All right. Well, let's look at it like this. From this image here, we knew that price was going to come back. All right. I mean, if you take the concept of mean reversion, where price will return back to the range. All right. It did just that. All right. Look at this aggressive move by the Asian session. It came back, tested the 50, tested the 200, and nearly attempted to take out the 800 mark. All right. That for me was level 1. All right. Came out. It locked the formation down here because it didn't break any further, and it stayed within the true support and resistance, which is this green line here, which is the initial low and the initial high. All right. These 2 lines here are like the strongest form of support and resistance. These lines are formed at the start of the week. All right. And they just play out for the rest of the day. All right. Each Asian session, sorry. Okay. Now, looking at this, how did we know that this was going to be level 1? All right. Because the way you determine a level is you establish the ADR. So the ADR for Kiwi yen is 60 pips. It achieved that. Then it's going to consolidate and pull back. The support, or where it bounces, okay, would be effectively your level 2. So now that we know that level 2 has come into play, we are expecting another rise to the upside. In order for it to be qualified as a level 2, it would need to break the previous high of level 1 end. All right. Now, if you look closely on this chart, you can actually see another W in this area here. So if I get my little tool, you can see ever so slightly, just drop that, you can see another W there. All right, pull up, come back, level 1, a little mini level 1, level 2, okay, level 3, and then extension. All right, you can take these little trades, guys. You can trade a cycle within a cycle because you're in line with the peak formation. The peak formation low implies that you want to trade away from it. So we're only looking for longs. We're not looking at going short. All right. So you can see how price in this area showed support at the PSR. All right. This is the physical support and resistance. This is the true physical, psychological support and resistance in the market. It respects it so well. Look how it goes down here. And then look when it comes and tests it and respects it here. It's a very strong support and resistance line this is. All right. This is what you'll get with the indicators anyway, that I'm going to be uploading very shortly. Now, we've established that this is level 1. We know that level 2 is due. So when we form a level 2 start, we know that we're going to see another move to the upside, which is exactly what happened. All right. So all of this move, it only really started from here. All right. The validity of level 2 started from the break of this high here. And that's exactly what it did. It went up, came up, end level 2. It's dropped. We now know level 3 starts. Okay. Because level 2 has taken out the previous level 1. All right. So now what we're waiting for is level 2 to be broken out. And that's exactly what's happening right here. So now we're expecting another move to the upside. So watching this video, you guys will see that price is going to move up to probably hit the range weekly high. All right. And in this area here, it will spike several times and take out the orders at the 75 mark. And then it will look to reverse. It will form another peak formation and then drop. If we zoom out, we will see that it will come, it should come to this area here. It should come, maybe come to this area here. All right, the 75 mark. The move is very aggressive. All right, so we could be expecting now pull up, slight pullback, continuation to the upside, and then we will start a new peak formation. And because it's Friday tomorrow, they wouldn't necessarily reverse it on the same day. All right, because what they will do is they will get traders trapped in this area here and make them believe that we could actually break this high and go further. All right, so you'll see a lot of choppy behavior on tomorrow's session on Friday. And then on Monday, they would effectively set the range. And then on Tuesday, all the way through to Friday, they would move and take price all the way down to here. Because remember, market makers need to get returns on their money. All right. They need to get a return. They've been giving out this money all the way up here. All right. And they need to get it back. So the way going back again, to reiterate, the way you determine a cycle, okay, is level 1 cycle is always a move away from the peak formation. It's shifting the zone because remember, they've got their money good here and they're trapping traders left, right and center. All right. And then they shift the zone. So they move away from it because if they stay there any longer, then they're not going to be able to make a return on the liquidity that believes that price is going to go lower. If you pay attention to this candlestick here, look, we spoke about this candlestick. Look how it pinned it down. Now, this is where I entered. Pinned it down and then came back up. And I took 50 pips. 35, sorry. It was about 35, 45 pips. Okay? And we drew yesterday on the hourly chart. We drew the 200-day on the 15-minute chart, and it appeared on the 50-day on the hourly. You know, I took that trade. This was the symbolic entry point of the peak formation. All right? Now, aggressive move to the upside, or so whatever direction it goes, okay? Because if you're dealing with M's, okay, aggressive move to the downside, M1, all right? I mean, look, if you look up here where the previous peak formation was, so if we pull up the chart, you'll see that's the 3 peak formation. So you've got an M in here, okay? M up here, move down, there it stops, pulls back, that's your level 1. All right, when it stops and pulls, consolidates, okay, that's where you determine your first level. It's exactly what happened here. Look, straight up, and then it consolidated and dropped and dropped and dropped. As long as it doesn't break the peak formation, okay, it will stay a level until it breaks there. So you can see here, it came down and showed support, and then it started to continue to come back. All right, so we know that we're in level 2. We know that we're not out of level 2 and working for level 2 until we break this level here, because price could just stay in this one direction like it has done. Yes, it's going up progressively, all right, but what you got to understand is until we break this level here and take on ground, then we know we've broken and taken level 2 to the next level, which is level 3, which is what you can see has happened here. It broke out, nice big shift, green candle, shifting out the zone, came up, pulled back, consolidated, okay, came back again, all right, to test the high, to take out some more. Like you see the pins, broke down and tested the 800 EMA, all right, and now we have level 3 start, all right, because the reason why this isn't a level 3 is because it hasn't taken enough time to develop. Level 3 is a really choppy, and it takes a while for level 3 to build, because it can't go all the way up, can pull back on the 50-day, all right, and then make more high and then effectively reset the whole trend. No, they can't achieve that level 3. This is a consistent with a level 2, all right. Level 1 is here. Level 2 only started from the break of here, yeah, and it only achieved 40 pips from the break of level 1 to the high of here, 41 pips. Its ADR is 60 pips. All right. That's not enough for a market maker to get his liquidity. He needs to repeat the process again. He needs to do another level 1 end, level 2 start. He's now going to do a level 2 end, level 3 start, and he's going to send price up and up. As you can see right now, it's exactly what it's doing. The Asian range is now being set. These guys have intentions of using Friday to take it to its high, all right? Maybe the London session will take it to the range weekly high, and then throughout the rest of the day, they will just keep price in a certain range and preparing it for Monday's open so that they can then send price and take it all the way back down here. Remember, they got their money in good here, all right? So that is Kiwi yen, you know, from the start of the week when we said on episode 5 that we were now looking for a reversal at the midweek point, which was on a Wednesday, midweek reversal. That is exactly what had happened here. All right. And we just knew it was going to happen because the levels needed to be respected. I'm not saying that we knew definitely it was going to happen, because things can change. But from the way price has been behaving from this point here, okay, until it broke this level, we were consistent. We will still follow through with what we said about it continuing back up to the upside. All right. And this move to the upside here completely locked in the formation for me, because I knew it would retrace. It would definitely come back down because it was a very aggressive move. Remember, the fast move is always the false move. All right. If you see price rise so quickly like this, you know something's happening. This is, it's definitely a stop hunt. And it was a 62 pip run. All right, so that looked like to me that they were taking out all the shorts that were being set, and they were closing some of their positions, their longs, on the way up as well. All right, but the market makers had bigger things in mind. All right, and then they sent price down. We knew it was going to pull back and form the basis of level 2. All right, and there's the confluence right there. It sits right on the psychological support resistance, and then it just kept drifting sideways. And then slowly, the slow and steady move is the true trend. And look at it, nice slow move, a few pumps to the upside to get it out of the zone, all right, and form level 2. Now we're looking for level 3, which is exactly what's happened here. And here we go. So now we're just waiting for it, guys. So we're gonna wait. We've got pictures of it here, all right, and we're gonna look back at this pair. Back at Kiwi yen. And, you know, you don't think that you'll be surprised, you know, because it's like you guys kind of see that it's going to happen because we're in line with the cycle. All right. We are respecting the weekly cycle. All right. And it's quite difficult to understand this. I get it, you know, but I will be explaining it more and more because we're just going to keep coming through it, you know, with more and more other pairs as well. Let's look at another pair. We're going to look at now. What have we got? Here we go. Well, this was beforehand. This was whilst we were drawing. This is on the hourly chart. All right, we drew that. If we take it to the hour, drop that there. There we go. That's exactly right. Right on the 50-day, on the 800 EMA. You know, sat right there. Came up, level 1, pull back. Level 2, pull back. Testing for level 3 now. You know, I know it looks a little bit messy, guys, but just understand, like, I'm introducing it to you. All right, we're going to start getting to the nitty-gritty stuff soon, where we're going to have like a clean chart, something similar to this. All right, something similar to this. All right, cool. So we've discussed that one. Now we're going to talk about another one. There we go. This one's dollar yen. All right, this is where we're now looking at levels. All right, oops, dollar yen. Dollar yen has shown a peak formation reset. All right, it's now saying up here, if I bring up the chart, if I bring up dollar yen, okay, it's saying now 3 peak formation high. All right, and it's been dropping, level 1, level 2, now waiting for level 3, which is exactly what's happened here. All right, we got pin to the low, to the high, back to the low. All right, you can see these black lines here. These are the psychological resistance and support areas. Okay, so what they have to do, the market makers, these key areas here, you'll notice that towards the end of the week, they will always try and bring price back into that area. All right, because remember, they've got to maintain a fairness in the market. You know, they can't just send price in wild areas. You know, they've got a target. They have X amount of money to shift, and it has to be at this certain point by the end of the week. All right, and it has to come back to normality before the end of the week. So what we're expecting with dollar yen, all right, is we're expecting a safe test here. It's going to pull back. This would be your level 1. All right, look at level 1 here. Mark it off. Level 1. And depending on where this goes, we need to see this to continue back to the upsides for it to confirm that it's a level 2 start. And then we'll move up to break out level 1, wait for consolidation, level 2 end, level 3 start. Exactly the same as Kiwi yen. It's exactly what we're waiting for. You know, let's pull up another pair. Let's look at Kiwi dollar. All right, Kiwi dollar has been trailing. I mean, it's been going well. It's been going all the way down here. We got the peak formation low here, bit of an awkward W. You can see, bring up the hour chart. you're able to see right there. If you can see the W straight away, guys, if you've been watching the videos and you can see the W straight away, you're going to get it. There you go. W, bring back, second leg, pull back, up it goes. All right, move up, level 1, move up, level 2. Now we're looking for level 3. All right, level 1, level 2, and we're waiting for now level 3 to form, where level 3 is choppy behavior. All right, and you know it's I know I'm making it look like it's quite easy, guys, but you know, with the breaking down of the pairs series, this is all we're going to be doing. All right, there's going to be one video where I'm going to work through every single pair. It's going to be a long time. It will take a little while. All right, but I'll make it as short as I can. But we're going to work through every single pair. You know, we'll have a look at Aussie, you know, Aussie dollar. Let's bring up Aussie dollar for the time's sake now. Okay, here we go. We have got peak to the low, drop. You could say that was no. You could say that could bring it to there, and then it pulled back ever so slightly, and then continued up, and then it pulled back. Okay, now the pullback here, yeah, inside of there is a W. So if we break it down to the 15-minute time frame, right? You could, yeah, it's very, very small. You could drop up and down. Yeah, it's right there if you can see it. You can see ever so small. Even the pullback of that right there. Pull back. And then it's got a continuation back up there. All right, you see it shifting out of the zone. These are these 3 pushes getting out of the zone. All right, pinned it right down to the Asian initial low. Right there, pin, and then it reversed straight out, pull back, continuation. All right, and even look at the TDI at the bottom here, you can see a W right down there. You know, CAD Swiss. Here you go. You got this is a pattern called the Batman. All right, this is from Steve Morrow. He talks about the Batman, which is pretty much you've got the head of Batman, the ear, okay, half a Batman. Can you see it? Batman's head? Yeah, it's half a Batman. I'll just delete that. Oh man, I'm so bad at that. But you can see half a Batman. So it spikes to the high, pins it, railroad, and then drops, attempts to take the high again, because what the market makers have done here, all right, is they've trapped liquidity. And remember, they can't send it any higher. Look at the vector candle, a big push to the upside. All right, they've now got money trapped right there. Right, they cannot allow it. They cannot allow any traders who are up here long to make a profit, because if they do, they fuck up the chances of them making a return on the way back down. Right. They need to install the idea that it's going to continue to go back to the upside, which is why they brought it back down again and then made the belief that it was going to continue. So they added more positions. That's the retail traders. And then they just started to slowly drop it off. And then before you know it, they shifted the zone, shifted it again. And then the guys that wanted to get in and ride the short, they got stopped out here with price rising all the way back up. They took out the stop hunt. Stop hunt usually hits between 25 and 50 pips is a stop hunt. And what do these books tell you? They tell you to set a stop loss anything between 20 and 50 pips. Okay, it's not by accident. The market makers know this because they know that retail traders follow these books. They follow the gurus. They follow everyone that teaches a course. Set a 25 to 30, 40, 50 pip stop. Well, there you go. They did a stop hunt on you because they knew, and this point here, that you went short. You were going to ride it on the break of the 200-day. They knew that by breaking the 200-day and then opening here and spiking it lower, you guys got excited, thinking that price was going to continue to drop. And then before you know it, they shifted the zone, took out all the stops, and then they continue with the true trend. All right. Let's do Euro AUD. Here we go. You can see now Euro AUD is going to change. The peak formation is going to change. All right. We're going to take a picture of this. This is a W, so you've got big drop to the end. Bit of a difficult W here, but you get the idea. It's down and then up. That's our W as such. All right, so now we've got out of the zone, so it's broken out. So we've now got level 1 here, level 1, because it consolidated back. All right, this would be your second leg of the W. All right, remember, first leg is always vector candles. You can see 1, 2, 3 pushes to the low. All right, and then it snapped back. This snapback here was just a stop hunt. They needed to get more liquidity because they knew what they were doing. They were changing the cycle. All right, then they brought it back down to here, and then they continued back up. And the second leg here, this would be your entry because they're shifting the zone. All right, and this pullback here is your first level. So we got level 1 end, level 2 start. Now we got level 2 start, level 2 start. Now is this level 2 end? It's too soon to say because it hasn't really made a big move. Look, ADR of 92 pips. You know, from the bottom of here, you've got nearly 50, 60 pips. You know, they will never take it exactly to 92 pips, but they do need to gain ground. All right. Now to say that there would be the start, it wouldn't be, it just wouldn't sit right with the ADR. I would even go to say that this ain't even level 1. This would be level 1. Okay, because from here all the way up is 70 pips. It's consistent with the 92. So this is what I mean about the cycles, working out if the cycles is a cycle or not. It's the most difficult part because you'll never always get it right, you know. But all I can say is it's now made a high from here and it's now consolidated back. Now we're into the new Friday's Asian range. We'll see what happens. We've got level 1 end, level 2 start. Ideally, we're looking for price to go up, pull back, go up, level 3, and formation. You get the idea. Drop. All right. I even take a picture of that so you guys can see when we talk about it at some point next week. And the dashboard, it really does help there. Okay. There you go. So guys, if you understand, you know, if you've got any questions about the cycles, don't make the mistake of believing that you have to get the cycles correct. You don't. Okay, look what happened here. It's, you know, is that a cycle? Look, is that level 1 or not? Well, taking into consideration about the ADR, you know, that would be fair to say from this point here to here that it achieved its ADR. One level, okay, is 1 times ADR. All right, so 1 level equals 92 pips. It doesn't always have to equal 92, but it has to achieve somewhat a valid ADR. It has to go and attempt its average daily range. And this is exactly what this move is. So this would be our level 1. All right. So don't get yourselves too confused and don't think that you need to understand the cycles and they have to be pinpoint. You never will get them pinpoint, but as time progresses, you'll start to see things and you'll be able to work out, you know, if it's a valid level 1 or not. All right. But you will get this, guys. It will come to you. Just continuously going over these videos is going to help. We'll be doing the breaking down the pairs every single night. All right. Saturday and Sunday, going to be doing them all throughout the week. All right. Because for you guys, it's about repetition, repetition, repetition. This weekend, you're going to get the indicators. All right. And a video on how to kind of thing. All right. On how to install it and how to understand it. So just stay tuned with this series, guys, because it's engineered to help you guys out. And you know what? Take a few trades. All right. Take a few trades. Just make sure that, you know, you keep your trade size low. All right. And you don't expose yourself because you are practicing. We're not in this game right now to make money. It's about understanding how to use the system. All right. So we've kept it quite sweet and short for you. Short and sweet, should I say? All right. Now, it did seem a little bit fast. Okay. And I was just throwing the information at you guys. But the next few videos that are coming are going to help you understand everything clearly with indicators, so you've got something to fall back on, so you can look left and right and say, right, he said this, he said that, or it's drawn like this, drawn like that. Okay, yeah, I'm just giving you an introduction to what's to come. Remember, guys, I know you are, you're itching for the stuff, but it's about understanding how it works before we're worrying about how to make the money. Remember, guys, it's about forget about trying to make the money right now. It's about mastering the system, because you master the system, you're eating for life. All right. We've had a good week as well, guys. Been uploading the videos for you. We've been doing all sorts of stuff, and I hope you guys are enjoying it. All right. Much love to you. We'll catch up again.